Okay, back again with the daily market review for gold on the 5-minute chart. As always, I'm going through my strategy and showing you my executions, how I get in, how I get out, what am I aiming for. And first things first, always make sure that your chart is set to New York. Secondly, you want to make sure that you've added a line that shows you 12 midnight for the day that you are trading. And thirdly, you want to put a line at 7 a.m. New York. So what this does, it shows you everything from the 7 a.m. line on the left-hand side is the London session. Once you've highlighted those 2 points, 12 midnight and 7 a.m. for the London session on your left-hand side, you want to highlight the London high and you want to highlight the London low. And as always, next thing that you want to look for is any key points from the London session being breakers. So you've highlighted your high, that's an important one. You've highlighted your low, that's an important one. You'll understand why these are important points. Secondly, you want to highlight any breakers and fair value gaps. So as always, we are using ICT concepts, hence why we are set to New York time. And if your chart is not set to New York time, these strategies are not going to make sense. You're going to get it wrong. So yeah. So once you have that, you want to highlight your breakers. And keep in mind that we are specifically trading the New York session. When does the New York session start? Well, I think it starts at 7. But the strategy that we are employing, you need to be in front of the charts from 8 till 11, if not later. No, till 12 max, depending on your schedule. But this is something that you want to do. You don't want to be in front of the charts the whole day. Your brain's going to get fuzzy. You want to have a specific time, and the reason why we use this time to trade is because I've found the most consistent success, hence why I employ it like this. So the 7 to 11 is not just some random time. It's something I got from ICT, which he calls the ICT kill zone. Why does he call it the kill zone? Because this is where you find your high probability trades to go in. And as I've stated, we are using breakers. So obviously you want to highlight any breaks that have been left in the London session. There's a break there. I've highlighted it. Boom. There was a break here. I'm being very crude with my drawings. I'm going to try and keep the video short, but I have gotten into details in other videos, so please do go in. But if I'm going too fast, just drop it in the comment and I will do it nice and slow for you. But if this is cool and you're able to keep up, amazing. So I've highlighted the breakers and I've highlighted anything that was just, sticking out to me. That stuck out to me, this break here, because we broke down and we never looked back. We didn't even come to fill in those fair value gaps. This break right here, just before 7. And then at 8:30, we came in down, hit this break and went up. Is that random? No, I was anticipating that. I was in this trade. You can see it on my TikTok and you can see it also in my shorts video with yesterday's date. This exact trade from here to here, to the candle body, not the end. So why did I get in? What made me get in here? So firstly, we had this break. So I was anticipating that if price gets here, I am anticipating that it's going to go up for this fair value gap or these highs right here. And these highs were not relatively equal, but it was a nice high left in the London session. So right here we have a low, a high, a low, a lower low, and a break in market structure. I'm going to draw it out for you here where the white line is, where it's touching it. So that's what's happening here, but you won't see it here. That's why you need to study price and get familiar with it, become one with it, so that you understand the variations of breakers that happen on the 5-minute, how it looks on the 1 minute, and how it looks on the 15-minute chart. So what I painted out for you here, I'm going to show it to you here. And as always, price is fractal. So on the 5-minute chart, it's going to look slightly different, but is this not it? So boom, boom, boom. That for me confirms that at a point where I was anticipating bullish prices, we created what? A bullish breaker. Made a low, a high, a lower low, and a break in market structure. That is perfect. See how many times it came? That came 1, 2, 3, touching that white line. 4 times, let's say that. And where would I have put in my stop? My stop was going to be on the low. On the lower low. I've said this countless times. The more you watch the videos, the more you'll get in tune to what I'm saying. So, come on now. So, here's the low. It's highlighted. Put it on the low of the break. So here, you could have put it in right there, but I went with that because that was the low of the break. It's relatively the same thing. It's not a lot of pips separating. Where are you aiming for? Your first aim should be here. You could have taken a partial there. Second one was going to be here, where the fair value gap is. Third one was going to be the high, which it hit it perfectly. Perfectly. Your second move was going to be a short, going all the way down, which it's in a bit, hey, how can I put it? A bit, I want to say a bit advanced. Yeah, it's a bit advanced because it happened on the 1 minute chart first, the breaker, then on the 5 minutes. So you would have gotten a bit later, but I want to break it down real quick. So high, low, higher, high, breaking market structure. Fair value gap here. It doesn't come up, not even close. Breaks down again. Makes a high, high, lower low. You could have come in here if you're able to see these breakers, but still technical. Keeping it simple, you wait for the break. So here's the first low that's been taken here. So that was going to be a possible entry. These entries are a bit tricky. With experience though, you're able to execute those. And then we broke down, taking out this low right here, which I've highlighted. Let me make it white. So we broke down that low there, and then there was a fair value gap. Perfect entry. What does price do? Price creates another breaker for you. And this is how you enter. At a point where you are anticipating something on the 5 minute, you go on the 1 minute and wait for that exact same thing to show itself. Once that break shows itself, the algo is telling you, okay, it's time to go in now. Where are you going in? On the retracement. If there's a fair value gap, perfect. If there's an order block, perfect. Where are you putting your stop? Your stop, that's a long position. Your stop, I've said this again, your stop goes on the high. Where does your entry go? Your entry goes in the fair value gap, or you can go by the order block, but always go with the fair value gap. As I've said before, when it passes the fair value gap, and if you are like 90% sure that, okay, cool, it's going to go short, then you have an opportunity to add another move. Hence why you don't go big one time. You add your positions gradually. And what are you aiming for? You are aiming for a low. It's not the London session low. What is it? It's a previous day low. Where is this low? As I've said before, your lows and your highs from previous day, if price has not hit it, keep drawing it out into the future. I'm not going to explain it here. I've explained it in other videos. But you keep drawing it out into the future, and when it hits it, you pull it back, and that's that. So as you see right here, because it's been hit, I can pull it back. And what do I have to do? I now have to highlight this low and stretch it out into the future. So next time when price is just breaking down, and I'm like, oh, but I'm expecting it to go up. No. Have we hit a key point in liquidity? Not as yet. We have not. So that was the move. And then once price takes out a key point in liquidity, what are we anticipating? We are anticipating a break in market structure. Because why? We've swept liquidity. Every time we sweep liquidity, but at key points, not just any liquidity. If it's a previous day high from, it doesn't matter which previous day, as long as it's a previous day. If it's a London high, a London low, anticipate a breaker. If it doesn't happen, cool, it's not happening. You see the structure, hey, you look at it, oh, okay, cool, it's a very bearish day. That means I just need to get in at the closest fair value gap or break a block, hey, that's here, vice versa. I will explain that in future videos, but going forward, so we've taken out this liquidity here. We have up, we break aggressively there. It's trying to show us it's time for us to go up, and I'll be honest, I did get stopped out here because I thought, hey, we're gonna go up now and go for the liquidity above, but I got stopped out, and that's why you get stopped out, because that's not the move as yet. But then I was patient because why? We've just swept liquidity, so we swept it again and we went a little bit lower, dug deeper, and then we touched the same line where we swept liquidity. That always confirms for me. But even before that happens, because I'm so used to anticipating these things, the more you study, the more you will get that intuition. It's just more reps in the gym. More reps in the gym, you will get better. So price takes out this high, takes out that high. I smile to myself. I'm like, it's time to go. I come back to the 5-minute chart. I see this breaker. What do we do there? We tapped in one time. I put my move in there. I put my stop there. And what did I do? I went long, extremely long. I'm still in this move and I'm waiting for it to hit exactly there. So why I was so confident about this, I can't even explain it, man. I don't care about daily bias. I don't really look at it like that there. I'm just looking at liquidity. Where have we swept? Where can I anticipate to sweep next? I'm not thinking more than 2 moves. That's the move. I'm going to show you the very trade. I'm still in it in a low box right here, and I'm waiting for it to touch there.